Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode number 276. Today is 5th of September, and many people keep requesting on some basic training or lecture on momentum investing itself. So we'll briefly touch upon momentum investing 101. So just the very basic tenets and what we are trying to achieve by doing momentum investing and how we are practicing it. Of course, there are many different ways of practicing it, but how we are practicing it is something that I would like to touch upon. But first, I look at the market. So markets, after two sideways days post the big move on Tuesday last, where Nifty made almost a 2% move. Market has been in a limbo since then, sort of digesting the large gains that came in that move, but also digesting the sort of many headwinds that overseas markets are facing, particularly related to energy crisis in Europe, and of course, again, the FII flow having sort of becoming muted once again, and domestic flow is also muted right now. So there's no big move that is coming yet, but this can be a calm before the storm, because if you look at the Nifty chart, we are still very close to that long-term trend line which we broke, but sort of fell back through that last week. But we are very near that borderline. So if that gets crossed, then a lot of momentum, a lot of liquidity will again flow into the market. And I think if that happens, then 18,000, 18,300 will come very, very fast. So we are still holding on quite well. And I think around 17,450, 17,500 is where the current floor has been sort of defined. So unless we are going below that, we are still simmering for that up move, I would guess. Metal stocks, private banks, some IT stocks, some FMCG stocks, these were the ones in green. But largely the downside today was on PSU banks, on commodity stocks, on energy stocks, and Nifty closing just about flat after having been slightly green during the day. So not a very particularly trending day, but small caps have remained resilient. Small caps have closed up 0.2%. Mid and small cap index down minus 0.1%. Other indices quite flat. Nifty next 50 in the red at negative 0.18%. In terms of weekend investing, small cases, MI20, the mid and large cap small case has done well at plus 1.14%. ATH2 of late has been doing very well. In the last, I think, 1 month and 3 months, it has outperformed almost all strategies. So 0.86% on ATH2, MIMT all cap 0.8%, MI50, MI India top 10 also doing quite well. Many of these strategies doing much better than their respective benchmarks. NNF10 also up 0.28%, and this is the heat map for the day, where Reliance was leading the charge along with Coal India, ONGC, the energy stocks, some steel stocks, commodity stocks were up. Autos were flat, some FMCG stocks were up, some private banks were up, but more or less sort of a dull day for the rest of the market. Sun Pharma was also up 1.73%. Suzlon Energy gained up 20%. There was a error in reporting by on the exchange, and it was inadvertently reported that Adani Green is Suzlon Energy stocks are getting pledged to Adani Green, and there was some back and forth on that, and then SBI Caps withdrew that exchange notice. But nevertheless, the market has its own mood. So while everybody in the market was thinking that this was a very minor error, it should not result in any price move, but Suzlon Energy moved up 20% on huge volume. So I mean, it's very difficult to put your finger on the pulse what is happening. Who knows, there may be something else happening now, or maybe some groups of operators have decided that this is tailwind enough for a small move up. So many a times, and most of the time, logics don't work in the market. So that is also something that we'll talk about when we come to momentum investing, that you can keep the logic aside at most point of times. Vakarangi up 19%, Tube Investment 8.5%, Exide along with Amaraja Battery up hugely today, 8% on Exide, and Triveni Turbine also up 8%. Very good moves on these stocks. GE Shipping down 5%, so shipping rates recently have crashed. V-Mart Retail down 3.5%, Gland Pharma, All Cargo, Polymedicure all down between 3 to 4%. So if you are very, very new to momentum investing and just to brush or to scrape the surface of momentum investing, I tweeted a few notes earlier this week. And very simply put, what we do at Weekend Investing is we buy what goes up and sell what goes down. So this is what entirely we do in terms of the structure of our actions. We buy what is going up and we sell once it starts to come down. We don't short stocks. We create baskets of portfolios of stocks, and within that basket we allow our automated rule-based algorithm to pick stocks that are going up and sell them once they don't go up any further or they start to fall down. Many a times we will have stocks where we did not make any money, so we bought stocks, they did not go up, we sold them. Many times it may happen that we buy and they move up sharply and then they start to fall and then we get out. And sometimes we may buy and they start to drop from the very beginning and we get out. So essentially the idea is that you're buying stocks that are showing a trend upwards, and then you are continuing those stocks till that trend exists. Once you identify that the trend has fallen through, you exit the stocks. There is no emotions around it. There is no fundamental framework besides some basic flag check around the stock. There is no forecasting. There is no prediction. It is purely based on the fact that there exists something called momentum, which is essentially that if some body is in motion, just like the Newton's law, if some body is in motion, it will remain to be in motion until some external force is applied to it. So what has been seen in practice is that once the stock starts to move, it will move in that direction for some time. That time is not decided. It may move on for the next 1 year, it may move for the next 3 months, it may not move for the next 2 days. But we have to essentially see till how long you are allowing it to, that space to move. So distilling this down a bit further, so we have 4 rules at any point of time. 4 rules are very, very crystal clear: what to buy, when to buy, how much to buy, and when to sell. These are the 4 rules that we follow in all our strategies. So all our strategies have this clarity of these 4 rules at any point of time, whether we are entering, whether we are exiting, whether we are waiting, whether we are holding. These 4 rules have to be clear at all times, that suppose price moves here, then when to sell would be based on that. Price moves there, when to buy will be based on that, so on and so forth. So you are basically clear about the rules of the game. There is no ambiguity. There is no thinking, looking left or right, asking anybody, trying to make a guess, nothing of that sort. Just very, very crystal clear. And this is something that we are doing in our own method or methodology, you may say. But on a larger basis, momentum investing can be done in many ways. The bigger pockets of momentum investing are absolute momentum, relative momentum, and dual momentum. So these are three different major broader categories of styles of momentum. I'll not get into detail of that, but very briefly, absolute momentum means you're measuring momentum based on the stock's own movement. Relative momentum may mean that you're measuring momentum in a stock relative to others in the group, and dual momentum means maybe you're having 2 or 3 indices and you are trying to flip the weightages or having the weights according to relative momentum between those stocks or ETFs or indices, etc. So these are the broadly. Now within each type of this process, there could be 5,000 different ways how you are doing it. I mean, somebody may measure momentum based on rate of change of price. Somebody may measure based on some indicator like RSI. Somebody may have a exit policy based on 200 DMA. Somebody may have an exit policy based on 10-week moving average. Somebody may have a policy based on 1.5 times average true range. There could be combination of these. So again, nothing is sacrosanct in terms of what should be the right entry exit method. But the fact is that whatever method you choose, if you will stick to it, you will make reasonable gains, I think. It is all a matter of sticking to one strategy once you decide that yes, this is the strategy I want to pursue, because there are so many other things that you have to consider in terms of what will be the churn if I use certain parameters, how that churn is going to impact transaction cost, how that transaction cost is going to impact my overall results, so on and so forth. So just to give you a very brief idea, so a basket of 20 stocks, for example, and we allocate capital, let's say equal weight to each of them, 5% to each stock. Now, let's say we rank them based on their rate of change over last 12 months. So today's price versus 12 month ago price, and we rank them. Let's say Nifty stocks, we are ranking them, all 50 of them, and let's say we take to the top 20 stocks and allocate 5% each. Now next month, let's say it's a monthly rebalanced strategy. It's a relative momentum monthly rebalanced strategy. We will again do the ranking and see some stocks may have moved out of the top 20. We'll remove them. And the ones that have moved in, we will bring those in. So we review it every week or every month as per the strategy rebalancing design. And then we will find that stocks that are weakening move out, stocks that are strengthening stay in, stocks that are new, finding new strength come into the portfolio automatically. So what does all this do? This all basically creates a self correcting portfolio where weakness gets removed automatically, strength is retained, and the weakness is replaced by new strength in the portfolio. So it is sort of like survival of the fittest, or you may say the evolution theory, where stocks or sectors which are evolving, and if you would have seen in your own journey that there is sector rotation happening every other month, every 2-3 months, and it's very difficult to take a call on which sector is about or is rising, which sector is going down. But here the sector itself sort of moves in automatically and moves out automatically. So this is the beauty of staying with the strength. A lot of folks are very uncomfortable buying stocks that are already moved up or are moving up, but only a very few percentage of people are able to buy stocks that have moved up or that are moving up because of our bias against buying something that is already high. So this buy low and sell high conventionally, here in momentum we are doing buy high and sell higher. So it is a bit unconventional. It is a bit difficult to have your mind grasp this kind of a investment system, because we are very well trained or you can say entrenched in the idea of buying low. In momentum investing, we don't buy low. In fact, we don't look at stocks which are going lower. We will buy stocks only that are going higher. So it's a very different, unconventional way. It's not easy, but it is very, very simple. And a lot of things which are simple may not be easy, but with practice you can make it easy. So again, no studying of fundamentals, no reacting to intra-week noise. If it's a monthly rebalance strategy, you're not even reacting to weekly noise. You'll take a call next month. No guessing what results are looking like. All left to BBC Bhao Bhagwan che. Price is God, and the price is going to lead me into the right stocks at the right time. So again, the basis can be many. Like I said earlier, what this will do is it will allow your winners to keep running, and it will keep losers short. So you'll have lot of small losers but few very large winners, and that's how you will make money in this strategy. So invariably every year you will get a few stocks that will create dramatic run. So in this past year or two, we've had dramatic run in stocks like Adani, Tata LXI, Tenla, and currently some paper stocks, and small losses in many counters. I mean, a lot of counters. And just to give you some very brief example of how this wins actually, is an example of Yes Bank, where the system strategy entered around 166, exited around 307, and never sort of entered later on. But the stock was also in Nifty, and Nifty exited here somewhere around 20-25 rupees. So if you were holding Nifty, you would have had to hold Yes Bank in that proportion in your ETF or index fund till here. But if you were holding, let's say, India top 10, you would have got out of Yes Bank and not having to hold this lemon post the fall. Again, another example, India Bull Housing. This was also part of Nifty, and we entered here, we exited here, did not make too much money, but we avoided a huge drop. So avoiding large falls is one of the key features of momentum investing, why we are able to beat most other strategies in return. I mean, these are documented research that momentum investing beats all other kinds of investing. I mean, there's 200 years of data and research available on US stocks, and this strategy is unbeatable as of now, purely because very few people practice it, and secondly because it is counterintuitive. Anything that is not popular does well till it becomes very popular, and in the last 200 years there has been no change in the popularity of momentum investing. Most people scoff it off, most people don't want to do it, and we are grateful for that. So thank you so much for your time. I hope you learned something new in this episode, and please do share it with your loved ones. We are always here to give you any kind of support. If you need for our query on any of our products, just send me mail at alok@weekendinvesting.com, and we're happy to revert. Thanks. Bye.